What's the best way to gauge an election? Maybe talk to the voters or conduct an opinion poll. These are the conventional options. But in India, there seems to be a new election pundit, the stock market. Now, markets do not have a favorite political party, but they do like two things: policy continuity and political stability. That's what stock markets want. Until now, nobody really gave much attention to the markets. Prime Minister Narendra Modi and his party, the BJP, were widely expected to win, so the assumption was that the markets would boom. We've now completed 4 phases of voting, and suddenly the markets are in the news, not because of the boom, but because of a sudden fall. Let's look at India's Sensex. Since the start of May, it has lost 1,500 points. The index is more than 2% down. Same with the Nifty. It has lost more than 400 points. Again, that's almost 2% down. So what's the deal here? Should you be worried about the Indian stock markets? Is there a political message here? The government says no. 2 central ministers have addressed this issue, Home Minister Amit Shah and External Affairs Minister S. Jaishankar. Both of them played down this market dip. Listen in.
I think to me, it's very clear where the election is going. The exact number people may have a debate. In a democracy, they should be debating it also. But I'm very sure as round after round takes place, markets will be less and less volatile, because the markets will see exactly what those numbers, or will get a sense of, where those numbers will end up. And I'm very confident those numbers will end up very, very good for us.
Home Minister Amit Shah went one step further. He said, buy up stocks before June 4th, because after the elections, they will shoot up. Well, let's keep the poll rhetoric aside. What could be driving the markets down? Does it have something to do with the elections? There are 3 factors at play here. First and most important, Indian stocks are already overvalued. What does that mean? It means the stock price is too high, the profits and outlook do not justify the price. Look at this report by Kotak Equities. It said Indian markets were overvalued across sectors. Only large cap shares were fine. The rest, around 90%, were overvalued. But inflated values do not last. Eventually, investors see the hype, so they book their profits and leave. When that happens, the markets crash. Which brings us to the second factor. A lot of foreign investors are leaving. They took out $2 billion in the last week. Compare that to April. In the whole of April, they took out just $1.9 billion. So $2 billion in 1 week and $1.9 billion in 1 month. You can see why the trajectory is bad. So where are these investors going? Well, money chases returns, and right now some markets are outperforming India. Japan, for instance, is doing quite well. So are markets in Southeast Asia. In fact, even Western markets are rebounding. In the US, Dow Jones is up 4.5%. In the UK, FTSE is up 5.7%. So the broad picture is quite clear. Foreign investors have booked their profits in India. They feel the markets are a bit volatile, so they're looking elsewhere. When they leave, they suck money out of the market. Less money equals less investment. Less investments equals lower prices. And finally, we come to the third reason. Poll jitters. The markets were prepared for a Modi victory. We had 5 state elections in November last year. The BJP won 3 of them, so the public opinion was quite clear. Prime Minister Modi would return for a 3rd term. The campaign also reflected that confidence. The party slogan was Char So Par, meaning more than 400 seats. But then came the voting and the turnout was low. 66.14% in phase 1, 66.71% in phase 2, 65.68% in phase 3 and 67.7% in phase 4. Compare this to the last elections. In 2014, the turnout was 66.6%. In 2019, it was 67.4%. I know the difference looks negligible, but remember, India has almost 1 billion voters. So even 0.1% is tens of thousands of votes. Now the question is, what does this low turnout mean? And frankly, no one is sure. Some say it could signal fatigue with the BJP or overconfidence of their supporters or just the heat wave in some parts of the country. Now, just to be clear, the markets do not have some inside information. They don't know who is winning any better than you and I do. They react to what they see. And what do they see now? A lot of chatter about the BJP losing momentum and a lot of press coverage about the turnout. Now, markets are not reacting to facts on the ground, they're reacting to perceptions. So, judging elections based on markets is quite risky. Chances are it's more about the financial side of things, like overvaluation and investor exodus. As for the elections, maybe let's stick to horses for courses. You wouldn't decide poll results based on GDP, would you? So why judge elections based on the markets?
First Post reports from the world's second largest continent. Hello, I'm Alison Lagrange. A very warm welcome from Durban, South Africa. We get you the news and the newsmakers from Africa. South Africa goes to the polls on the 29th of May. I will track the election and bring you ground reports. Is it the end of the road for the African National Congress? And will former President Jacob Zuma stage a dramatic comeback? From elections to climate change to innovations and opportunities. As the world's attention shifts, we report from Africa, the heart of the global south. Join me every weekday live on First Post.